What's up, stock compounders? Brad here. So Mohnish Pabrai gave a talk, a Q&A session on January 10th, almost a month ago. You know, when I first watched this, I thought I wasn't going to have much to say about it. A lot in here Pabrai has already talked about, he's already touched on, but I watched it a few times. I sort of let it marinate, and I realized, wow, there are some real gems in here that are worth digging into, worth unpacking a little bit. So that's what I'm going to do in this video. I'm going to touch on 4 or 5 different areas that were covered in this talk by Mohnish Pabrai. So let's dive in. The first quote he gave, which he's given before, I'm a better investor because I'm a businessman, and I'm a better businessman because I'm an investor. That's something that Warren Buffett said. And it makes a lot of sense, right? If you have experience running a business, you're going to better understand how to dissect businesses as an investor, how to figure out what makes a great investment. And if you have investment experience, you're going to understand capital allocation better, and you're going to maybe be able to run your business better. So what occurred to me, a lot of people that are new to investing, they're always asking, hey, what's the best book to read, to get started in investing? What should I be reading? And I think my response to that going forward is going to be, books, yeah, they're nice. You can spend a couple hours with them and maybe absorb some wisdom. But really, if you want to take the fast track to being a better investor, start a business, right? And you might think, oh, that's ridiculous. Like, 95% of businesses fail within the first couple of years. That's just silly. That's not wise advice. But Pabrai points out, most people think entrepreneurs are risk takers, okay? Real entrepreneurs are not risk takers. They've figured out how to minimize their downside, right, if things don't work out with the business. Mohnish Pabrai, he mentions in this talk, tried to start 2 businesses before he got some traction with his 3rd business. Those first 2 businesses failed, but he was only out, I think, a couple $100 on the first one, maybe a couple $1,000 on the second one. So as entrepreneurs, we do everything in our power to minimize risk, to minimize downside, to minimize what we lose if things don't work out. And that's extremely powerful. So I think that is going to be my advice, especially for young people, maybe before you have a family. If you really have ambitions to be a good investor, to be a great investor, get that business experience. And I got a good friend, Jack Duffley, who hosts the Punch Card Investor channel with me and a few other guys. He's buying businesses, right? I think he's about 25 now. And it is such a smart decision for him to be doing that at this stage of his life, to be buying and running these small businesses, to really understand, what are the few things that matter for that particular business, and realize, like this applies to all businesses, right? There's a few things that matter. They're not really in a spreadsheet. There's some qualitative aspects to what matter as well. It's not all about the numbers. So I'm very happy for him. And I think that's going to be my advice going forward on what book should I read to be better at investing. Well, maybe it's the wrong question. The second chunk I want to talk about here is this concept of spawners, right? So Pabrai, after he read Nick Sleep's letters for Nomad Investment Partnership, he realized, oh man, Nick found the Holy Grail, right? He was able to identify a couple companies, right? Really 3 companies that had this spawning attribute to the business. Pabrai says, find companies that can enter new businesses, okay? Or enter adjacent businesses, right? Adjacent to the kind of existing business. Keep the bet sizes really small, okay? Very few companies can do this. Very few companies have this framework of understanding that the thing about entrepreneurship and capitalism is that the payoffs are asymmetric. The maximum you can lose is what you put in, right? Assuming you're not using leverage, you're not shorting, things like that. You're being smart about investing. The maximum you can lose is what you put in. The max you can win is 50x, 100x, 1000x, right? There's really no upside cap in investing. So that's the asymmetry. And that's beautiful. If you could only lose what you put in and you could make 1,000 times what you put in, that's a very compelling proposition there. And so I just really quick want to highlight, what spawners does Pabrai own, or is he kind of nudging people in the direction of through this free lunch portfolio on the Chai with Pabrai blog? So 2 companies, these top 2 here, are Turkish investments, Raisis Logistics and TAV Airports. Those are both spawners, okay? Tencent, he owns via Prosus, which he doesn't have to disclose, but he's talked about it before. That's a spawner. Brookfield Asset Management just spun off BN. Brookfield is a spawner. And then Microsoft, Pabrai doesn't own. He owns these top 4. But Microsoft is listed as one of the spawners in the free lunch portfolio. Okay, you've got TAV Airports, restaurant brands, Starbucks, Microsoft, and the 2 Brookfields, the kind of parent and the Brookfield that was spun off. And then, of course, Raisis is down here. Tencent is down here. Now, those are spawners. They just show up in the shameless cloning bucket because the spawning bucket was full, okay? So that's Pabrai's little trick there. So, I was a little surprised that Microsoft shows up in the spawners bucket as opposed to Amazon. I think Pabrai has spoken more favorably about Amazon in the past, spent more time talking about it as this kind of incredible spawning, has spawning DNA. Clearly Microsoft does as well, but I was a little bit surprised to see Microsoft instead of Amazon there. So that's just a little bit on, Pabrai, he talks about spawners, the incredible attributes of these businesses that can kind of spin off in different directions from kind of the primary core business. So that's a little example of what he actually owns that fits into that framework. Okay, the next thing I want to talk about is the Patels. And Pabrai has talked about the Patels before. He talks a lot about them in his book, The Dando Investor. So what I'm really coming to appreciate about the Patel story is kind of the Lollapalooza effect here. A number of different factors coming together and making this such a powerful business model for the Patels, why they've really been able to win. You've got 0.1% of the US population in the Patels. And I believe the Patels really came over to the US as refugees from Uganda. They were booted from Uganda and showed up in the US really with nothing, okay? And what did they need? They needed a place to stay, right? They needed a roof over their heads. So they decided to buy motels. Now, the beautiful thing about motels, it's a very labor-intensive industry, right? You've got to clean the rooms every day. There's a big labor component. With the Patels, who had these bigger families, right, you've got the labor, okay? You don't really need to pay them, right? The family, you're sheltering them. They've got a roof over their head. So because of that, you drive costs to the floor effectively, which is an incredible competitive advantage compared to other, lodgings, motels, hotels in the area. Gave them a place to stay. They could employ the whole family. They were vegetarian, right? How many places are there to eat out that serve vegetarian meals, right? In these kind of podunk towns in the Midwest, right, or wherever across the U.S. Hard to find vegetarian meals back in the 70s, 80s, when the Patels were really coming to dominate this industry. So they were really forced to cook their own food, okay? Buy groceries, cook their own food, again, driving costs virtually to the floor. They couldn't really spend money on food, eating out. So that was a big cost saver. It's easy to borrow money for real estate, right? With real estate, you don't really need to show a lot of income, right, to get a loan for something like real estate, because everybody appreciates that there's value in the asset itself, okay? So it's easy to borrow money for something like that, for a business like a motel, which is great because they probably didn't have a lot of credit worthiness, having just arrived. So you've got virtually zero cost to run these motels. And you've got competition that has quite a bit of costs, right, in labor primarily. And so you can underprice your competition, drive them out of business. Now you're the only game in town, and you can charge more reasonable rates, keeping your costs at virtually zero. So it's pretty easy to see here how it was really a kind of a perfect situation for the Patels to take over 70% of the motel industry. And then, of course, move into hotels and more expensive assets in that industry. So a pretty great story about heads I win, tails I don't lose much, right? When you come here with nothing, there's not a lot you can lose. And that's a great position to be in as an entrepreneur, when you just don't really have anything to lose because you don't have anything. It's a very powerful position to be in as an entrepreneur. The next thing I want to talk about, I didn't know this, Pabrai's goal in 2023 is to deeply study 50 businesses, okay? So basically one a week, maybe take 2 weeks off for the holidays. So that's pretty cool. He says most businesses I look at, I get rid of in the first 5 minutes, okay? If it doesn't meet some basic criteria, high returns on equity, long runway, great management, it's easy to just toss it out. And he says, I studied one business in the first 10 days of January, right? This talk was given on January 10th. Studied one business, discarded it, okay? It didn't check the boxes. But he says, if I can do 50 in a year, my hope is I can find one. All right. So that's, that requires some patience. It requires, real commitment to this framework of swinging big when 7 moons line up and just waiting, right? Waiting until that happens. Having that patience to realize, hey, I only need to swing once a year in order to get to where I want to get to. So I'm very curious to see what rocks Pabrai turns over this year and if he comes up with anything. Hopefully we'll be able to see it. Hopefully it's in the U.S. and he has to disclose it on his 13F filings. But even if he doesn't have to disclose it, he may talk about it. Just like with Racis, right? He is the PR person for Racis. Racis doesn't, they don't have investor presentations. They're not trying to sell investors to buy the company. It's really Pabrai. He's the only one who's out there saying, hey, look at this company. Look how ridiculously mispriced it is by the market. So I'm excited to see what he turns up in these, studying 50 companies this year, kind of going deep on them. The last thing I want to talk about, and this is the part that's really been marinating and kind of getting me excited. Pabrai's asked, what's your favorite book related to investing? And he's talked about this before. It's no surprise. It's right here. Poor Charlie's Almanac. I don't think I've heard him say this before. He said something similar to this, but he said, I think this book is better than a college education. Okay, that is a very strong statement. but he said it, and he tries to reread it every year. And there's just so much wisdom in here. He really points to the second half of the book, a bunch of talks and speeches that Charlie has given over the years to various groups. The Psychology of Human Misjudgment. It's on YouTube. It's a talk, I think in 1995, that Charlie gave to the Harvard Economics Club. And Pabrai says it took Charlie 50 years of experience to be able to write that talk. Okay? Wow. What a gift, right, for us to be able to spend an hour and 15 minutes watching a talk that synthesizes 50 years of integrating bits of wisdom from different areas of Charlie's life, from experience with all of his investments, being parts of different businesses. So that's incredible, right? That just kind of points to how much value is in this book. And then he gets into this idea of human evolution, right? And how our brains they're not really designed efficiently to operate in today's environment, right? We've got baggage that used to be useful, but isn't really anymore. And if you can understand kind of those nuances of the mind, we can use those to our advantage, right? And a lot of this is highlighted in Influence, book by Cialdini. But he says, there are portions of our brain that are really ancient and portions that are relatively new. Our brains are not optimized for the current environment. So one example of this is reciprocation. Reciprocation is built into the brain. Back when, we were living in hunter-gatherer societies, if someone were to go out, say I go out and kill a buffalo, right? I've got way more meat than I can handle. We don't have refrigeration. We don't have freezers. This meat has to be eaten relatively quickly. And there's only so much I can eat. So what am I going to do? Well, I'm going to share it with my neighbors, right? I'm going to store this meat in the bellies of my neighbors. And what that means, right? I'm not physically storing it there so I can eat it later. I'm giving something to others, right? I'm storing goodwill in their bellies. So next time they go out, right, they hunt, they kill something that is way bigger than they can eat, who are they going to think of? They're going to think of me. So it's this idea of reciprocation. Now there's a quirk regarding reciprocation in that all favors are created equal, right? There's no calibration engine to say, hey, this guy, he gave me a huge favor. This guy gave me a little favor, okay? There's enough food to feed one person. I'm going to feed this guy who did me a huge favor. No, the favors are equal, okay? And that's a big thing to understand. We just have a good feeling towards them, right? There's no I have a great feeling towards this person. I have a slightly good feeling towards this person. I like them both, okay? Now, the way Pabrai utilizes this quirk with reciprocation, when someone asks, hey, I'm interested in Pabrai funds, can you send me some information on it? He could just email them information, right? Email them a PDF. Okay, here's how you send money. Here's what the fund is about, all that stuff. He doesn't do that. He mails them a package, okay? I think there's a few books in the package. There's a $50 pen that says Pabrai funds. So now, it's seen as a gift by this person, okay? And the only way to reciprocate the gift, okay, there's just one way. Well, they could return the package, and I think Pabrai says 1 in 100 people do that. They don't want the burden of having this, obligation to reciprocate, so they just send the package back. I didn't ask for this gift. I don't want it. The only other option is to wire, a couple $1 million, right? The minimum to be a part of Pabrai funds. So you can see, obviously, those aren't sized equally. A $50 pen for a couple $1 million investment in Pabrai funds. But doesn't matter. Reciprocation doesn't have to be sized equally. There's good feelings towards Pabrai, right? There's a desire to give him something. And that's really the only thing to give. It reminds me of how Pabrai and Guy Spear send out books, right? They send out thousands, probably tens of thousands dollars worth of books each year. And they're building goodwill. Okay? And it's a very powerful idea. You want large portions of the world to have good feelings towards you. Okay? And for Pabrai and Guy Spear, like, they're running funds, hundreds of millions of dollars, AUM, in these funds. So, they have a budget to send out books every year. That makes sense for them. But you don't need to be in that position where, if I can't send out hundreds of books each year, I just can't build goodwill. There's something even more leveraged, I think, that's sending out books to individual people each year. Of course, that's a great thing to do. But these social platforms, right, where there's really zero cost of helping others, okay? And this is kind of a quote from Charlie Munger here, helping others know more, okay? Charlie Munger would say, the best thing you can do is help another human being know more. Obviously, Charlie really prioritizes knowledge and wisdom, but that's his take. So we can help others know more by learning publicly on social platforms, YouTube, Twitter, Facebook, whatever. And it's really the ultimate scaling of goodwill. Okay, if I can share what I'm learning and it helps somebody, and there's no cost to reaching thousands, tens of thousands, hundreds of thousands of people, that is a very powerful model for reciprocation. It's a very leveraged way to use reciprocation. Okay. Great for everybody, great for me, right? It's a win-win. It's not, hey, I'm taking advantage of people by utilizing this quirk in the brain. No, it's a win-win. Okay, and that's a very important nuance. Helping others know more by learning publicly on social platforms is the ultimate scaling of goodwill. You're seeing Pabrai and Guy Spear doing this as well. Pabrai, basically, when he agrees to do an interview, he says, yeah, I'll do it, but I need to be able to post it on my YouTube channel. Okay? You see Guy Spear really getting into the podcast game, right? They understand this. They understand the scalability, the zero frictionality of this way of building this, playing on this reciprocation tendency in humans. It's Guy Spear and Mohnish Pabrai mailing out hundreds of books each year on steroids. So I just kind of had this insight. I think it was yesterday. I put it on Twitter. Didn't really get much reach, but that's okay. I think it's very powerful. Now, in The Psychology of Human Misjudgment talk by Charlie, this is one of about 25 quirks in the human brain. Okay, this idea of reciprocation. This is one. Okay, so you're probably starting to see how powerful this book is, Poor Charlie's Almanac. It's something I'm going to go through much more deeply now. Hopefully I'll kind of make a video series about it. Lessons from Poor Charlie's Almanac. So I've been getting excited, kind of unpacking this book that Pabrai thinks is the best investing book ever. So anyway, guys, that's all I wanted to share from this one. I'm glad I listened to it a few times and just saw, hey, there's some things worth going much deeper on here, even though they've been covered in the past, right? It's not necessarily information that's new, that's going to be the most powerful for our lives, to make us better investors. It's taking these powerful concepts and really drilling down on them. Not just sitting back and yearning for the novelty of, oh, that's new, I haven't thought about that before, but actually going deeper on, things that are deep and wise. So anyway, big shout out to Mohnish for continuing to put out content on social platforms. Definitely helping me as an investor. Hopefully they're helping you as well. And with that, guys, I will see you all in the next one. Take care.